Gold. For millennia, it has been the ultimate store of value. But in the modern digital age, it is a weapon of choice. Welcome to our deep dive into the volatile world of precious metals. Why do these markets pump with such fervor, only to collapse in a matter of hours? Silver, often called the poor man's gold, follows a similar, even more erratic rhythm. To understand the crash, we must first understand the pump. It starts with a whisper in the boardrooms and a shout on social media. Momentum builds as the smart money begins its move. But who is truly behind this? Is it organic demand or a carefully orchestrated play by the world's most powerful institutional entities? Massive hedge funds and bullion banks possess the liquidity to move mountains. When they buy, the world notices. As the price climbs, the fear of missing out, or FOMO, grips the retail public. This is exactly what the architects of the pump want. By the time the average person buys in, the trap is already set. The liquidity is high enough for the big players to exit without slipping the price. Then comes the tipping point. The moment the buying pressure peaks and the first major sell order is executed. Within 24 hours, billions in paper wealth can evaporate. The crash is often twice as fast as the pump that preceded it. For the individual investor, the losses are catastrophic. In just one day, lifetime savings can be cut in half. The psychological effect is profound. Trust in the safe haven status of gold is shattered, replaced by panic and regret. The ripple effect hits the US markets instantly. As gold falls, the US dollar often spikes, creating a vacuum of liquidity. But it doesn't stop at the US borders. The global financial system is a house of cards, and precious metals are the foundation. Emerging markets feel the burn as their currencies devalue against a surging dollar. A local crash becomes a global crisis. When the dust finally settles, the wealth hasn't disappeared. It has simply changed hands, from the many to the few. History tells us this is not a one-time event. It is a cycle that has repeated for centuries, designed to extract value from the impatient. Even in the days of the Roman Empire, the manipulation of metallic value was a tool of statecraft and conquest. Today, that manipulation happens at the speed of light, through algorithms and high-frequency trading. So, how do you protect yourself? In Chapter 2, we will explore the specific red flags that signal a coming crash. Knowledge is the only true hedge against a rigged game. Stay tuned as we pull back the curtain even further. Because in the world of gold and silver, nothing is ever as it seems. We are just getting started. Modern manipulation doesn't happen on a floor. It happens in the code. High-frequency algorithms execute thousands of trades in a heartbeat. These systems are designed to detect retail sentiment and exploit it, triggering massive liquidations that feed the crash. But algorithms are just the tools. To understand the why, we must look at the giants, the central banks. Central banks hold over 35,000 tons of gold. Their policy shifts can send shockwaves through every market on Earth. The relationship between gold and the US dollar is a delicate dance. When the dollar is threatened, gold becomes a political pawn. A gold crash is rarely isolated. It often precedes a broader liquidity crunch in the US stock markets as investors scramble for cash. As margin calls go out, even the most stable assets are sold off, creating a domino effect of red across the board. The global effect is even more severe. For countries reliant on metal exports, a crash can mean national bankruptcy overnight. Behind every point on a chart is a human story. Savings lost, businesses closed, and futures derailed by a game they didn't know was rigged. Small-scale miners and local jewelers are often the first to feel the sting, long before the news reaches the mainstream. For them, gold isn't a speculative play, it's a lifeline. A crash is a devastating blow to their very survival. So, if the masses lose, who truly profits? Follow the money back to the short sellers and the institutional giants who thrive on volatility. A crash is simply a massive reallocation of wealth. It is the vacuum that sucks value from the many and delivers it to the few. Is there a silver lining? Some see these crashes as the ultimate buying opportunity, if you have the stomach to weather the storm. But for the average person, being a contrarian is easier said than done. It requires a level of detachment that few possess. As we move into Chapter 3, we will look at how to identify the peak before the plunge. There is no crystal ball, but there are markers. There are signs left by the big players if you know where to look. Your best defense is education. Understanding the game is the first step to not being a pawn in it. Look closely. The truth is often reflected in the very assets they want you to sell in a panic. The global economy is a giant machine. Technical analysis reveals patterns that repeat through history. One of the most dangerous, the double top at a major resistance level. Look for divergence. When the price hits new highs but the trading volume is falling, the pump is running on fumes. Simultaneously, the media machine goes into overdrive. When everyone from taxi drivers to news anchors is telling you to buy, the exit is near. When the institutional sell orders hit, the first 24 hours are a blur of red and panic. Wealth isn't just lost, it's liquidated. As the price drops, it triggers stop-loss orders. This creates a cascade, a self-fulfilling prophecy of selling that the big players anticipate. Within hours, retail positions are wiped out. The house, the bullion banks, and major exchanges takes the collateral. The global currency market's real. Emerging economies that backed their debt with gold reserves see their credit ratings slashed instantly. The fear and greed index hits its lowest levels. Logic is replaced by pure, unadulterated terror. This is the max pain point. This is psychological warfare. The goal is to force you to sell your physical assets for pennies on the dollar to the very people who caused the crash. Paper gold is easy to manipulate, but physical gold is the final target. They want the real asset, not the digital claim. Every move is monitored. Every panic sell is a data point in their grand strategy of wealth extraction. When the despair is at its peak, the buyback begins. The institutional giants quietly start accumulating the very assets the public just threw away. The cycle is complete. The price begins its slow, steady climb again, and the world prepares for the next inevitable pump. The only way to win is to not play their game, to trade on education, not on emotion, to see the signs before the crowd does. Your homework? Watch the volume, ignore the hype, and never invest more than you can afford to see evaporate in 24 hours. In our final chapter, we will look at the long-term future of precious metals in a world of digital currencies. Is gold still relevant in a world of Bitcoin and CBDCs? The answer might surprise you. As the global financial system evolves, the very definition of value is being rewritten. Will gold remain the king? The secrets are there for those who look. Until then, keep your eyes on the charts and your mind on the truth. The market never sleeps. We have seen the pump, the crash, and the manipulation. Now we look forward. What is the future of gold and silver in a world rapidly going digital? The rise of Bitcoin, often called digital gold, has created a new paradigm. But can a digital code truly replace a physical element? Central bank digital currencies, or CBDCs, are on the horizon. This shift toward total digital control will forever change how we value physical assets. The United States holds the world's largest gold reserves. In an age of digital uncertainty, these physical bars remain the ultimate backstop for the US dollar. Globally, nations like China and Russia are accumulating gold at record rates, hedging against a dollar-centric financial system. As we've seen, the USA market is sensitive to metal volatility. A gold crash is often a canary in the coal mine for systemic fragility. The money lost within 24 hours of a crash doesn't just disappear. It leaves a legacy of debt and distrust that can last for generations. When the shouting stops and the screens go dark, the overall world market is left to pick up the pieces of a shattered foundation. But silver has a different path. Its role in green technology and electronics ensures that its industrial value will always combat its speculative manipulation. So, who is behind the pump and crash? It is a complex web of institutional greed, algorithmic coldness, and the eternal human fear of loss. Understanding this web is your only defense. The markets are designed to be confusing, but the patterns are ancient and predictable. Education is the lighthouse in the storm. It allows you to see the rocks before the market crashes into them. Despite the manipulation, gold remains the ultimate truth in a world of paper promises. It has survived empires and it will survive the digital age. It is the only asset that doesn't require someone else's performance to have value. It is the silent king of the financial world. And silver, the reflective mirror of our industrial progress, will continue to shine as we build the technology of tomorrow. We hope this investigation has provided you with the tools to navigate these treacherous waters. This was The Precious Metal Trap. The world market is a living, breathing entity. Respect it, study it, and it can be your greatest ally. Ignore it, and it can be your ruin. The choice is yours. Stay informed, stay patient, and stay vigilant. The truth is worth its weight in gold. The most famous silver pump was led by the Hunt brothers. By 1980, they owned 1/3 of the world's entire private silver supply. Their attempt to corner the market drove prices to record highs before the exchanges changed the rules and the price collapsed overnight. This highlights a crucial truth. When the big players are losing, the exchanges can, and often do, change the rules of the game. Fast forward to April 2013, 400 tons of gold were sold into the market in a single afternoon, triggering a flash crash. This was paper gold manipulation at its finest. The flood of sell orders overwhelmed the system, purging retail investors in hours. The 2020 spoofing scandal involving major global banks showed that even today, the largest institutions are not above the law, though the fines are rarely a deterrent. Billions in fines were paid, but for the investors who lost their shirts in the 24-hour crash, the damage was already done. Watch the gold to silver ratio. Historically, it is a key indicator of which metal is being manipulated or undervalued at any given time. History shows us three peaks: extreme retail euphoria, dangerous levels of debt, and sudden, unexpected regulatory shifts. When the debt bubble in the US market reaches a breaking point, the precious metals pump is often the final exit door for the wise. The goal isn't to buy the bottom, it's to find the exit before the lights go out. In Chapter 6, we'll build a survival blueprint. Patience is the only commodity the big players cannot manipulate. Learn to wait, and you learn to win. Time is on the side of the educated investor. The cycles will continue, but you don't have to be a victim of them. Keep your eyes on the horizon. The next pump is already being planned behind closed doors. Stay tuned for our next chapter, where we break down exactly how to protect your wealth in the next 24-hour crash. Because knowledge isn't just power, it's the only real insurance you have. Gold has outlived every paper currency ever created. Remember that when the screens turn red. The first rule of survival: if you can't hold it, you don't own it. Paper gold is for speculation. Physical gold is for preservation. Secure your physical assets. Whether it's a private vault or a high-security home safe, storage is as important as the metal itself. Don't just buy gold. Diversify within the metals. Silver for industrial utility and platinum for rarity. This creates a multi-layered shield. Silver's industrial demand provides a floor that pure speculation cannot break. It is the working man's metal with institutional potential. Adopt a long-term mindset. Dollar cost averaging removes the emotion from the pump and crash, allowing you to build wealth steadily. Watch the market, but don't obsess over it. Set your levels, trust your research, and wait for the smart money to make their move. Keep your eye on the global geopolitical compass. When tensions rise in the overall world market, gold is the only true north. As the US debt continues to climb, the systemic need for a metallic backstop will only grow. The math is on your side. We have covered the manipulation, the history, and the future. You are no longer a spectator in this game. You are an educated participant. Knowledge is the key that unlocks the door to financial freedom. Use it wisely, and the 24-hour crash will never catch you off guard again. The storm will come, but you are prepared. The markets will crash, but you will stand firm. The truth is your ultimate hedge. Stay informed, stay vigilant, and we'll see you in our next story.